Wonderful good day, ladies and gentlemen. Precious Metals Summit 2014 here in Zurich, and it's my pleasure now to have a fantastic gold producer here, Lakeshore Gold. And Anthony Makuch, who is the president and CEO, will give us an update about his terrific company. Anthony, thanks for taking the time.
Thanks for having us on.
Well, gold is struggling, the markets are struggling. I presume still your company is doing good. What's up? What happened in the last quarters? And especially, I want to talk about your production and what you have achieved so far this year.
Well, actually, if you get to our production in the last quarter, it was our fourth consecutive quarter of solid financial performance, actually, but our seventh consecutive quarter of solid production. Mm-hmm. And you know, in Q3, we produced 45,000 ounces of gold, mm-hmm. Cash costs below $600 an ounce, wow. All-in sustaining costs below $900 an ounce, and it's really our fourth consecutive quarter of solid operating performance with cash costs and all-in sustaining costs at those levels or below $1,000 mm-hmm. an ounce.
And I'm sure, well, you're making money. You're not only cash flow positive, you're also profitable, of course, through that. But how much money do you have by now in the bank?
Well, so actually, for this year, we started the year at 34 million in cash. Mm-hmm. We're currently sitting well financed. That's over 67 million in cash.
Oh, that's a nice bolster, yes. I would say. Yes. Fantastic. What is the outlook for the whole year? What do you expect production-wise and also cost-wise?
In terms of production, we gave guidance at the beginning of the year of 160 to 180,000 ounces mm-hmm. of gold. We've been updating our shareholders. We expect to produce very close to 180,000 ounces of gold this year. May even beat that number. Mm-hmm. From a cost perspective, for the first 9 months of the year, our all-in sustaining costs were under $900 an ounce. Mm-hmm. We expect to stay under $900.
So you keep that, yeah.
Of all-in sustaining costs, and our cash costs mm-hmm. per ounce were under $600 an ounce, and we expect our cash cost per ounce to come in perfect. Very close or under $600 an ounce. So even at gold prices as they are today, the company is still profitable, still generating cash mm-hmm. flow, and still able to fund its business.
Yes, and I think it's very important because it can go worse. We know that all. It could be 1,100 or below 1,100, so you still make money, you are safe. You will survive the thing. Yes, yes. That's, I think, a clear message. Let's come to the future, and I think we should talk about some positive things. What is exploration doing so far? What are your targets for 2015, as I presume you are still exploring a bit?
Well, really, some of the most exciting things. So, you know, the company has had solid financial and operating performance over the last number of quarters. Mm-hmm. But the most exciting thing for the company is really the exploration upside. Mm-hmm. We've come up with some new exploration results over the last while, both at our Bell Creek operation, but more importantly out at Timmins West and our 144 Gap. We believe we're on the verge of coming up with some new discoveries mm-hmm. where we're going to substantially add to our resource base over the next 12 to 24 months, and work towards extending mine life much longer than what we currently have.
Mm-hmm. Can you already say a little bit? What is a guess? What can you extend the mine life? I know it's tricky to say, of course, but it's a feeling. Is it like, do we talk about, let's say, 2 years, 5 years, or maybe even more?
Well, I mean, it is early, right? Yeah. And part of it all is related to a lot of moving targets. But I would think that our Lakeshore's operations in Timmins will be no different than a lot of the previous underground mining operations in the Abitibi Greenstone Belt, whether Timmins, Kirkland Lake, Val-d'Or, where these mines were started with 3 to 5 years of production, and after 20 years they still have 3 to 5 years of production, and some of them are still around for 100 years. We expect to be there for a long time.
That looks very good. Fantastic. What would be the bigger picture for the company, if I may ask that? Your, let's say, major milestone for 2015, or let's go a bit beyond 2016-17. Can you talk about it?
Well, really our business plan is derived over the next few years mm-hmm. in 3 key areas. But one of the main key areas is in our current production levels of 160 to 180,000 ounces a year. We are looking at sustaining that production mm-hmm. level over 2015 and 2016, mm-hmm. mainly because our number one priority with the company and for financing for the company is to pay down debt. Mm-hmm. And we currently have $30 million in senior secured note in debt, mm-hmm. which we're paying off, and between now And next May, there's a milestone with the final payment of our gold-linked note, which we're fully financed and able to pay down. And then we will pay down a $20 million standby line of credit. That'll be removed from our balance sheet. And then we'll be in a position to pay off our convertible debenture as well. And all these numbers I'm talking about and the company's ability to do that is all tied around even at low gold prices. Our reserves are all done at $1,100 gold.
Fantastic.
We think we feel pretty confident of what we can accomplish. Remember, all of our costs are in Canadian dollars. So the impact of changes in U.S.
helps
dollar
a lot, huh?
exchange rate helps us a lot.
Fantastic. So we can say probably that you are, in quite a nice time period, you are debt-free.
Yeah, that's right. And financially, the company is well positioned to fund its business throughout the next few years. And our strategy is to focus on sustaining the business at these production levels for now, and keep our costs, be more efficiency to really manage unit costs and keep our costs down. So that's a big part of our priority. The other aspect, though, again, is getting back the exploration upside. The exploration results we've just put out at 144 Gap and at Bell Creek, and I think what people should wait for is, or continue to look for, is future updates on exploration. We feel that we're on the verge of some significant exploration upside for the company, and what we can do in terms of extend mine life and add to the resource base, and continue to replace reserves mined year over year for the next while.
Fantastic.
As I said, we intend to be here for a long time. Be a solid, low-cost producer in a good environment, in a good jurisdiction in Canada where we're located, and build upon that over the next while.
Yes, and build value for the shareholders.
Yes.
That's it. Super. Anthony, thank you very much. All the best for that. And I really like what I heard so far. And keep fingers crossed you get rid of the debt. And then you are free to grow.
Okay. Thank you very much.
Ladies and gentlemen, that was Anthony Makuch, the President and CEO of Lakeshore Gold. Well, you heard it. They will pay back their debt, hopefully everything in 2015. And still costs below the 900 level. I think you said 860 altogether. So I think those are fantastic costs. Even if gold goes below the 1100, 1050, it doesn't matter. The company makes real money. And that's very important in those times. And they have a strong balance sheet, enough money in the bank. They will go through this. Have a look at the company. Check it out. Thanks and bye-bye from Zurich.